Hi, everyone. Starting a minute earlier. BOE decision imminent. Blake, if you want to grab the screen, go ahead.
Good morning, Dale. Good morning, everybody.
Hi, everyone. How's
Good
everyone
morning.
doing?
Good morning. Yeah, let me go ahead and grab the screen over here. And what are you expecting out of the Bank of England there, Kman?
50, 75, or 100.
Well, that doesn't help me a whole lot.
I'm expecting 108.
We're about 30 seconds away from the Bank of England decision. Pretty big support coming in here at the 618 retracement, coming in at 112. Also an ascending trend line. So what that means to me is if we get a break lower today following the Bank of England decision for whatever reason that hits the wires right now, it's going to be kind of a bearish event, and that would follow in with
75.
35
75.
Oh, 75. Sorry. Okay. All right.
7-2 to raise bank rates.
7-2, roughly as expected.
And Railroad voted to raise rates by 25 basis points.
Breaking down.
Oh, hey.
Yeah, we're breaking lower. Careful.
Only 25 BPs, one of them.
Oh, so we have a little bit of
Dissension.
yeah, and a little bit of dovish voting there. Interesting. All right,
I like it at 108.
You like it at 108? There you go.
Yeah.
You heard it from the what
am I? I don't know. I'm I'm Forex guest hunter.
Forex guest hunter.
Forex guest hunter.
All right. Typically we don't cover the Bank of England live here, but just because it's one of those weird time changes where
yeah, that's why.
Our time changes like next. Yeah, it's over the weekend. Yeah. Anyway,
I get scared in the dark when it comes too early, Blake.
So look, if you're let me just put it this way. Sorry, I'm running on just a few hours of sleep last night. This is our last night having Steve, one of the founders of ForexAnalytix, having him and his family here in Arizona, visiting from Greece. So yeah, we're kind of doing it up the last couple of nights. Anyway, I just want to say, just like yesterday, you saw a lot of movement following the FOMC, and then it reversed later in the session. Now that was following the press conference.
How weird was that? The statement after the rate hike gave everyone hope, and like we talked about it. I know Stell's not here, but we thought that Powell would end up being mean, and he was a very mean guy yesterday.
He was. He really well.
He was mean to us.
We'll talk the takeaways here in just a moment. But I just wanted, the reason why I'm saying all this is I think we got to watch the sterling, and this cable, as long as we're below like these lows right here around the 112.70, 112.80, somewhere in this neighborhood, this previous support. And you can see how the hourlies, we just couldn't get back above there. I think if we get back above that would, suggest that we get some sort of reversal in the string. But until we do that, I mean, that is about 70 pips away. So unless that happens, I'd be a little careful with the sterling. I mean, maybe there's some commentary that comes out. Kman, what are you expecting here following?
So they did 75. There were two dissenters. They revised lower Q3 growth, but revised slightly higher the Q4 growth, it seems. But the kicker, I think, were the comments about front loading again. So if we hike now, we can do less later. That's sort of what's what I can see in the first lines of the Bank of England. The market is starting to bring down inflation expectations when I look at the rate sphere. So it's a bit logical that sterling got a bit of kick in the nuts, but I don't know if it's really long lasting. We have to wait. We have Bailey speaking in half an hour, so usually he's he's a guarantee for a sterling sell-off, but then sterling sold already pretty much on beforehand. Yeah, I think there's some, yeah, there's a level around here, but to me the big ones are waiting a bit lower. That's in the mid to high 110s, and then the big one around the big zone low 109s. But I'm not sure we're going to get there. Globally on the dollar, I was also saying that we may be sort of at levels where we could expect a pause before tomorrow labor report.
Yeah. So you know, let's talk a little bit about that. So you did the flow show today with Ryan. Now Ryan's going to be here shortly. He's just doing the Bank of England coverage in the chat rooms this morning. So that's where Ryan's at. He'll be joining us just in a few moments. But you and Ryan had met. I know. And by the way, look at the reaction that we're getting from the 618 retracement. Very, very critical 112 level, right?
Yeah.
I mean, this is pretty key for the sterling. I have to say, I think that was like an absolute layup. Getting up on the flow show, getting up this morning in Europe, seeing the dollar actually pull back, follow ahead of the European session. That must have been like the easiest trade, like layup trade for anybody. I mean, I was sitting there last night looking at it. It was getting kind of late. Like I said, Steve and his family are in town. We took their son to go play video games and, you know, bowling, you know, like have fun as a kid and type of thing last night. And it was pretty late last night, and I was like looking at I'm short I'm long dollars, you know, against several different currencies from yesterday. But I was looking at its pullback yesterday or last night, and I'm like, oh my gosh, I'd lay right into that if I could, you know, be up and watch it. So what were your thoughts when you got up this morning regarding the dollar?
Exactly that. It was pretty clear that looking at what was happening, that some model funds would get triggers to sell to buy more dollars. Really, I've been just to have a few stabs at it personally. It was a very hawkish FOMC, right? And in fact, what was really hawkish about it for me was that he started with the soft things and then gradually moved over to the more hawkish side. And that is something that we will have to look out for in the upcoming meetings, is that how he starts and how he evolves Powell over the several meetings. Over the next meetings. The press
and look what Powell said yesterday. I mean, you were saying earlier, or no, you were talking about the Bank of England. What do you think is, like, for you, was the biggest comment that we got from Powell yesterday that was so entirely hawkish?
No pause yet, and not even discussed higher for longer.
Yeah, we have a way to go. Quote.
Yeah,
we have a way to go. We have a way to go.
Yeah. That you know what,
going to move higher and stay there. So that really did it all right.
It was the one comment to me that when he said we are looking at a rate higher than we did at our previous meeting. Yeah. That means whatever your peak, whatever you thought was the terminal rate in September, it's higher today.
Yeah.
Period. End of story.
Why
so the market had to automatically reprice that.
Yeah.
So if you're standing in the way, or if you were standing in the way of the short dollars following that statement, that's on you, because that clearly states, look, whatever you were thinking in September, it's got to be a lot higher now.
Absolutely.
Period. So and just so you guys know, we were covering it live in the ForexAnalytix community yesterday. Steve and I were side by side here. Ryan popped in, gave his comment. I actually was caught wrong-sided because I was, we couldn't broadcast the commentary live because I had Steve next to me. We've got a microphone, you get echoes, so I couldn't put on pal. So I had to basically watch commentary as it was coming through. And I went into this being short dollars, and I was profitable. And then all of a sudden my P&L switched. My
Yeah.
P&L came off, and I was like, oh my God. And then I look up and I saw the headline, like just that split second when he made those comments. And then I turned around and reversed and went, and I've been, obviously long dollars since yesterday as a result. But if hopefully you guys and gals were there. It was fun. It was fun covering that live with Steve. Can't do that all the time because obviously we trade for a living ourselves. So, but it was a good time. Kman, what do you think from here? And Dale, I want to hear your commentary too. I'm going to let you take over. Maybe you got some good questions for Kman. I can just keep it on the charts.
I don't.
Okay. Well, let me ask you guys this. Why do you say this is a good level for us? And I'm going to ask Kman this because he mentioned it a moment ago. Why is this such a good level for us to look for a pause ahead of non-farm payroll? What are you seeing that suggests that?
First of all, if people were in our community yesterday, we called the flip or the Powell flip right where around the highs of the euro dollar, and we started to sell euros, especially euro dollar yesterday around 90. What was it? 99, 50, 65. So just to make a bit of publicity for our community, it's really it's pretty cool, and everybody can help each other. So why do I say that we could build in a pause? First of all, there's a few levels around here, around this 97.5. Let's just keep it simple on the euro dollar. There's a few levels around here, around the 97.5, and from high to low, we've done about 200 pips, over 200 pips now. I'm not saying it's enough, and I think we are going to find dollar buyers on any reasonable dollar dip. But we can't forget that tomorrow is NFP, and we've seen some of the leading indicators already starting to come off a bit in other areas of the job market. The yields haven't been bearish, but we've been reading about some seasonal activity as well. So there is always a bit of a risk into tomorrow that the labor report could be a little bit less. So I've got some extra levels there around 97 the figure ish. It's also a prior low there. I think anywhere between here and 97 the figure could be enough, just ahead of the NFPs,
Yeah. Okay. I appreciate that. And Ryan is just popping in here. And Ryan, like I was telling everybody else, you weren't around, that we covered the FOMC yesterday live. You popped in, you gave your thoughts. We saw the big reversal in the dollar. Started getting long dollars yesterday. It was a really, really good ride. But now here we are. Bank of England, BOE just met. We got to pivot off the 618 retracement, 112, very key level. We were just talking about that as we came on moments ago. What are your thoughts here following the Bank of England? And I want to hear your thoughts following the Fed. And by the way, and I'm going to ask Kman this a little bit later, and Dale, your thoughts too. I mean, look, the euros, trading around this 97.25. Should I really be selling dollars here? Like, should I be trading counter trend and being short dollars based on what happened yesterday? But I'm going to come back to you, Kman, regarding that. Ryan, what's your thoughts about the Bank of England and everything else?
Bank of England, they've drawn down forecasts, so potentially not as high a rate path as maybe needed. Inflation forecasts come down. A couple of voters in there wanted lower hikes. One wanted 50, one wanted 25. So a little bit of a dovish slant there. As I said to Dale yesterday when he asked me about the Bank of England, I said it could be trading 120 or 110 after the Fed and Bank of England, and we might be getting there to 110. So
yeah,
it's bonkers. I was looking for a rally to smack maybe up one high 113s if they were hawkish. But yeah, I don't know what these guys are doing. We've still got this budget stuff to come, so then there may still be changes further out. They haven't got a handle on anything, these guys. You've got to just look at the pure fundamentals. If you want to take the simple option, we've got over 10% inflation. You know, that's going to keep them hiking, whether they go to 50s, 25s, whatever. So the path hasn't changed.
But how? Okay, it's going to keep them hiking, but how's that translate into trading the sterling? You want to be a buyer down here?
I think you got to pick your spot. And as you're showing now, you know, 112s, we've got down to 112s, have pretty much held it. So, you know, you can play the big figure game again. 111, and if you get down, you know, to that 109s is going to be a big area. Kay's been talking about that for a long time. It's like I said yesterday, it's like I said this morning with the Fed and everything else, you've got to go to the wider charts and pick your areas, pick your stretch points, because they're the ones that are going to make or break the expectations. You know, we've had a change. We've had this hawkish thing from the Fed, you know, and I popped on before the press yesterday and said, you've got to be careful if you're short dollar going into this, because it's the credibility thing. You've got to acknowledge that they're going to slow at some point. You've got to acknowledge what's happening in the economy, but they've got to keep their hike bias and say they're going to combat it. And that trumps everything. He could say they only hiked 25 pips last night, but if he says rates are going to 5.5% in the longer term, it trumps it all. It supersedes everything.
Yeah. How do you trade that? Like, you know, does that mean, you know, I should be buying dips in the S&P and selling rallies in the dollar, or is that that just, you know, a fool?
Yeah, but you could do that, but it's really all about picking levels. Look at gold. I've just bought gold at 16.18. Why? Because it's at my fib that I've been pointing out for the August. You know, that level. I've just bought it 16.18 because that's a big level. We've come from, what were we yesterday? 1660s over the Fed.
We're at 1675. Actually, we hit the neckline of the previous.
Well, exactly. So we've come that
head
way.
And shoulder pattern that just it failed. But this would be a
We've
wedge, right? So you're at wedge support. You know where your risk is.
Yeah, we've been in a range. Okay, we've come through all the other Fed meetings, all the other bits and pieces, all the data, and we're still in the range. So we've had a big bit of news from the Fed. So the question you ask is, right, can we break out the range? And those are the levels you trade. Forget about trading 1640s, 1650s, all the crap in the middle. Go to the wider levels, go to the bigger levels. They're the ones that matter. And so I'm trading it. I'm $5 up. We'll see where it goes.
And by the way, if you want to know what's
Great
happening
coaching
here in ForexAnalytix and what Ryan's doing or Kman's doing, or myself, or you know, just, you know, different traders, not just us. You want to follow kind of the trades that we're in and what we're playing. Like, if you want, like, here's my positioning from yesterday, and I'm still in these trades. You know, you want to see them, you just come over here to the trades room inside of our community. One of the things that I think is really important is we not only talk about what we're trading, but we talk about the whys and why we're doing it. All right, so let's and Ryan, thank you for that. Now let me go back to Kman really quick. Going back to the FOMC, what do you think you should be doing? You know, I mean, a lot of people have been calling a dollar top, myself included. I mean, I looked at the dollar, you know, previous to this week, and, you know, and I'm like, hey, we're at a big resistance on a monthly basis. We're at a 20-year channel, or whatever it is, 20, over a decade channel resistance. Bigger, you know, or big resistance on the last couple of years or year and a half. You know, and I was like, okay, this is a good place to be selling dollars. But following yesterday, I don't know if I feel quite the same. How do you feel?
No, I'm my view hasn't changed. I still can't sell dollars. So I'm not saying that FOMC surprised or not, but it's just that they are on a path. okay, we see leading indicators coming coming a little bit off, but then we see those same indicators come off elsewhere as well. And then you have to imagine that the dollar or the Americas are still a bit further off the mess that Europe is in as well, and the fundamentals of the yen are not working. The sterling is uncertain, so I'm still in a dollar buy dips camp, and I've been trading it that way. Sometimes I think we can build in a pause like now, but I'm not going to take the other side. That is not for now in my playbook anyway. I'm rather waiting for corrections and then trying to buy dollars again. I think it was very hawkish yesterday. And the rest of the central banks, as we have seen, barring ECB, they are already starting to look perhaps to slow the move a little bit, and Fed is still going very strong.
Yeah,
So
isn't
only on the basis
that
of
crazy?
that-
We're now seeing a divergence amongst central banks, and you know, I was talking to Chris Weston from Pepperstone about that last night. I'm like, I mean, you got central banks like the RBA, which is actually being more dovish. And I mean, you know, where's that versus where the Fed's at? I mean, that, and I've been trying to, you know, trade the Aussie on the long side and doing quite well actually the last couple of weeks, but I'm looking at the Aussie dip as we approach these trend lows, and I'm not feeling too excited about buying it right now. You know, and it's a much change. It's a change. It's a little bit of a departure on how I was feeling like literally the last few weeks playing this to the long side here. As of yesterday, I have like no desire to be on the long side of the Aussie at the moment. Doesn't mean it's not going to bounce. I'm just saying I just don't have that innate desire. Dale, what do you think is going to happen? Oh, go ahead.
The only one where I'm, and as I said yesterday, pre-FOMC, the only one I'm going to be cautious about is the yen. And actually, exactly what I thought that may happen on a dovish or hawkish case in the FOMC happened.
Yeah, that was a good call yesterday. Kman.
He started a bit on the more softer side, and dollar yen crashed, and then he turned around. Dollar yen was flying, but much slower actually than, like, for instance, euro went down. If you talk in percentage wise, so if you look at all the yen crosses, most of them are trading lower this morning, and that was, I think, one of the other things to note. Because we have this risk of stealth intervention by MOF, Bank of Japan, and that's more difficult to trade the dollar yen on a bullish dollar scenario than perhaps other dollars.
Yeah, and I mean, you know, and that was a great call, playing the yen on the long side. And I asked you just before we were finished yesterday on the F.A.C.E show, you know, 24 hours ago, I was like, you know, what's your trade here? And you're like, you know, buying yen against any cross, so minus the dollar. Great call. All right, Dale, what are your thoughts? You know, has your mind changed? I mean, you know, we've been sitting here at the S&P, you know, playing it to the long side, and I have to imagine the market has been wrong-footed. You got people that have been, you know, trying to chase risk higher, you know, buying S&Ps, you know, thinking that, hey, we're going into the seasonal, midterms are coming up, we're going to be, you know, rallying all the way to 4,000, and all of a sudden, you know, the rug pull from yesterday. Has your opinion changed on the S&P or on the markets? What are your thoughts here?
Well, I was looking for a sell-off. I came into the week and said, let's see what opportunities the Fed creates or doesn't. So I view this as eventually a buying opportunity. I don't think we're going to take out those lows. I think there's another leg to the upside, and, you know, just going to fine tune my entry. Could be tomorrow. You know, everything could, some things can change tomorrow with the NFP. But yeah, I still think there are too many bears out there. Puts went off the scale again yesterday. So I don't know, between here, you know, do your fib work. I think you have to buy a break, and 3,900 was not the high of this correction.
You know, it's interesting. It was the 127% extension of the last leg. And so, Dale, what you're saying is we're gonna eventually bottom here. Now, what I would imagine we have to see is a turn in the data. You know, we really have to see
It happened tomorrow.
Yeah,
Yep.
well, that's the thing is we have jobs
It
report and
happened
start to
tomorrow.
see, you know, the
Yep.
employment data or picture look a little bit more dour or sour or whatever you want to call
Just
it.
to
But I
look
think
for any glimmer of hope, hourly wages coming down or stabilizing, you know, any glimmer of hope, though, if there is any, maybe the headline number misses.
yeah, and not to forget, it's we have the NFP on Friday. We have inflation data next week, and maybe we have seen a peak of it in inflation. But the jury may be out, and the jury next to me, who's sitting next to me right now, his vote might be in. And by the way, I have Steve, who is, you know, obviously for those of you that listen here all the time, he's one of the founders, one of the co-founders of ForexAnalytix, sitting next to me. Him and his family have been visiting from Athens, Greece. And Steve, what are your thoughts on what happened yesterday here?
Good morning, everybody. So nothing has really changed, and you know, I've been shouting about this for a long time. I didn't believe that we're going to see a pivot from the Fed, and we didn't see a pivot from the Fed. We've been warning that people should not keep looking for a pivot. I specifically said yesterday that Powell has disappointed already, like something like 4 or 5 times. And he's probably going to do it again. We then got the initial statement out of the Fed. The market got enthusiastic because of an ambiguous statement there. We had a live coverage. I said immediately that people should not read too much into it because the clarification might, you know, make it look a lot more hawkish than they believe. That's exactly what happened. Is it a surprise? No, it isn't a surprise. Why isn't it a surprise? Because nothing has fundamentally changed. Inflation is still running very hot. Stock indices are doing decently, which is also an important part, right? I mean, we've had a decent pullback, but it's definitely an orderly one. I mean, the markets are not breaking. The financial markets seem to be doing okay for the time being. Data have not soured substantially. You know, for me, things are simple. Keep following the trend. Dollars should continue to go higher. The BOE gave us an idea of why that might be the case also, right? I mean, we're seeing the difference between the Fed and the BOE. So, you know, as simple as that. I don't have anything to add.
All right, Steve, and you know that really, and by the way, that is Steve's just woke up voice, 4 hours of sleep voice, and getting to enjoy our time zone, Dale.
Yeah.
So thanks, Steve, for your thoughts. He's standing next to me, and I think he's going to go back to sleep. Just kidding, Steve. Yeah, it's been a rough one. Hey, the sterling's actually rolled back over. Rolled over. We have Bailey speaking here in a second. We got some news coming out. We have weekly unemployment claims now. Dale, when was the last time we really paid attention to weekly unemployment claims? But it used to be like on a every Thursday. You know, it's kind of like, oh my God, it's a market mover. I think we're almost there again, right?
Oh, I don't know. I didn't even know it was coming out.
well now you know what, you might start paying more attention now. Hey, Ryan, any thoughts before we head into the North American session?
Yeah, really quickly. Claims obviously needs to be watching for the trend. We had Challenger Gray layoffs that posted a second jump in layoffs on the trot.
That was a big mover, right?
It can be. Usually it's not. But again, it's part of the picture. It's part of the jigsaw puzzle. But I cannot overemphasize enough the importance of the NFP tomorrow. It can be dangerous for traders to think that what we're seeing in the dollar, if it pauses today, that's the end. If it's a big NFP tomorrow, we're going to get another huge leg up in the dollar and yields. So don't get sucked into thinking there's a dollar top, there's a yield top. It's all on the NFP later.
Great. That's great warning. Kman, a few seconds before we go into the data. Any thoughts?
Yeah, I mean, for me, it's still yeah, NFP as well. But I'm still I'm actually hoping for a small weaker labor report tomorrow, especially on the headline, and I'll be a dollar deep buyer. The only thing that I am not trading right now is the S&P, and I think if you get better numbers and the market sells off stocks, or especially the S&P, for instance, or the Nasdaq, on good numbers because the yields are rising, then I think I'm going to go Dale's side that a good number may actually be a pretty decent occasion to buy equities lower. Because the economy is doing well.
All right. Appreciate your thoughts. The data is being released right now. And then I know Dale's got his guest coming in. Getting no real big dollar reaction. Remember, Andrew Bailey is speaking right now. Kman, Ryan, thank you. There comes the data. Any thoughts on Bailey today?
Coin toss. He'll probably muck it up somehow.
I used to like it in coffee.
What does muck mean?
Muck, mess it up.
Oh, okay.
Put a little Bailey's in your coffee today.
What's that?
Put a little Bailey's in your coffee today.
Yeah,
there you go.
Instead of listening to him. I'm trying to promote Patrick. Can you give me a hand here? Hey, Patrick, I'm trying to. There you go. Thank you. Okay.
Steve was just mentioning how that's horrible data. The Canadian building permits number was just horrible. Remember that Canada never had a housing issue. They might be bubble. They've been on a bubble for like the last who's a Canadian here? I mean, we got a lot
I am guys
in our chat room. What's that?
Oh, sorry, guys.
Patrick, there you go. Patrick.
Oh, Patrick is.
Canadian.
Oh, well, hey, Patrick. Good morning and welcome. Tell us about the housing market there in Canada.
Well, look, just as a chart trader, I'll tell you, and this is going to shock everybody, the Canadian bubble popped in 2000. So when you price the housing bubble, the housing market, when you price it in gold, we actually peaked in 2000, and we haven't made new highs since then. So what we're seeing nominally, yes, everybody's saying there's a housing bubble. Housing nominally, the prices, they went up a lot. There's still, when you adjust them for gold, they're still nowhere close to their 2000 highs. So even if nominally the house price is in 2000, or let's say $100,000 for a house, and now that same house today is $500,000, the price of gold went up so much that your house did not protect you against the purchasing power destruction they did. So that's the way you got to see it. You can't measure in fiat because they're printing, adding zeros. You think your wealth is going up. You think you're in a bubble, but compared to other asset classes, nominally houses could maybe go even higher, and people will understand why. It's because the other asset classes are also going higher.
I want to price them in dollars because I live in Scottsdale, Arizona. So let me price them in US dollars. How about that? I'm just kidding. Hey, look, hey, Dale, I'm going to let you take over with Patrick. I got to get rolling to the ForexAnalytix community. Patrick, I want to welcome you. But first of all, before I go, let me just say thanks everybody for tuning in today. I'll see you guys with the rest of the team on the Morning Edge. But make sure you check out the Trader Funding Program if you want to learn how to be part of the ForexAnalytix community for a period of time, and then trade our money. Check it out. It might be for you especially if you want to access larger dollar amounts and not risk your own money and just trade our money, keep 75% of the returns. Well, there you go. All right. Dale, thank you very much. Patrick, welcome. I've never met you, but welcome. Glad that you're here. And Ryan, Kman, Steve, you guys have a great day. And thank you all for listening in. All right, Dale, it's all yours.
Thank you, team. Patrick, welcome back to F.A.C.E. How are you, my trading warrior brother?
Dale, it's always fun, man. I love these. I love coming on your show there. It's so, it feels like a morning talk show for me. I wake up and you guys are already chatting. I join on the call before it's my turn to go. And
Oh.
it's really fun hearing other people talk about the markets.
Yeah, there's a lot of talent on the team. I believe you're a very talented technician, although, you know, at times you remind me of the movie Goldfinger. You love only gold. And I'm with you. I think we're into a capitulation decline now in gold. Maybe we trade 1580 or so. But it's great to have you here after the Fed, Patrick. You want to share your screen, and
Yeah.
perhaps we could get a look at your great charts, bad charts.
The screen's
Patrick's
disabled.
charts are bad charts.
They're very bad.
They're
Screen sharing is
bad.
disabled.
Oh, someone else, I think Blake left. Let me see. It is. Blake, if you can hear me. Okay, hold on a second. Let me just Skype him.
Yeah, there's gold right now is I'll show you the charts after, guys. It's the US equities right now. They're entering, or like they already broke down versus the producer price index versus oil versus inflation. And now nominally, they're actually starting to break down. And
Okay,
this, I'll
you
show
could
you
do
a
it now.
100-year chart I have of the SPX or the
You
Dow.
could share now, Patrick.
I couldn't. All right.
Yep.
Hold on. Let me click again. Share. No. Cannot start sharing. Because somebody else is sharing. So somebody has to stop their share. That's what's happening. You cannot start screen sharing while the other participant is sharing.
I'm not sharing.
I see a screen
Let
of.
me see. Let me try. Let
yeah.
me share, and then I'll unshare.
Oh, there
Okay.
it is.
Now I'm sharing. Now I'm unsharing. Try it now.
Screen share. There we go. Perfect. All right.
All right. 100-year chart.
Yeah, let me pop that up. Just to and this is a secret, guys. We have to always take a step back. And anybody who is new to the trading world, and I kind of I was wondering, why do people always look at 6-month chart, 1-year chart, and they don't look very far? And then when you go on Yahoo, Dale, what's the default range they show you of data when you go on Google Finance or Yahoo Finance? I think it's not even a year, right, of data they put there.
Yeah. Yeah, people get used to using a microscope, and you love the telescope. So, there are different kinds of, you're more of an astronomer than a biologist. How about that?
I don't mind doing biology, but first you have to start from if there's no sun to warm up the atmosphere for the microbes to grow and proliferate, it's no use looking at biology, right? So you need the correct macro structure for the biology to work out. And this is the macro. Look, we're in space. It's a black background. This is SPX. Do you see that my screen, guys? Yeah.
Yes, got it.
SPX divided by producer price index, quarterly chart, quarterly candles. So here I have SPX data from 1914 all the way to today. And now you can understand these macro tidal waves, which they come in, they sweep, they take years and years to play out. And what's great about these cycles, once you get those confirmed moves in these cycles, your whole trading career, you don't want to fight that. You want to make sure that your mindset is aligned to be in harmony with these higher capital flows, because they're going to last 10 years. That could be, or even 20 years. If look at the 1929 breakdown. So here's SPX just doing a beautiful bull run, outpacing inflation, the producer price index breaks down. That's it. Once that game over line has broken down, you have to start placing the odds in favor of not playing growth stocks, of playing more commodities, hard assets, etc. Because if you don't have that mindset below that game over breakout down line, you're going to suffer, because inflation adjusted, it took 30 years for the SPX to break even.
Recover. Yeah.
You gotta be careful. You have to understand these things. And if ever this game over breakdown line was a false breakdown, fine. So as soon as the price goes back above previous highs, then you say, okay, my premise, I thought it was a game over breakdown line. Something happened. The macros.
This is not any longer.
That's right. And then you change your bias and say, okay, I was wrong. But look at this. So this line, one, here, I didn't know this upper trend line. Well, okay, this is a channel. So here I have one test at the bottom, 2, 3. So this is a valid bottom rail.
Yeah, a
Then
lot
in the
of touches.
1970s, touch here, then breaks below, false breakdown, goes back above, retests. So this line is pretty much valid. Then
That
after
was
that,
the
I have
inception of the bull market, August 1982.
right here. Yes,
I know, I
exactly.
was short IBM then, down there. So I
You were-
remember the day it turned.
And it turned on a
And
false
you
breakdown.
don't remember because you were only in your parents' imagination if they even knew each other.
Hey, I was 6
This-
years old in 82 there, Dale.
Oh, okay. See, you seem so young to me.
Still young.
What
it
were your positions? Were you playing with a gold coin?
Jesus, man.
When you're 8? Did your dad give you one or something? Did you know
Man.
about, when did you first discover hard money, Patrick?
Oh man, probably in the mid 90s. My parents divorced when I was 12, and my mother, her boyfriend was really into coin collecting, all that
Okay.
stuff, and used to buy me gifts every year of Canadian Mint stuff. And just when you hold a physical coin, we grew up with that. Maybe the millennials don't know. There's something special about holding a silver coin, a gold coin. It's I don't know if it's imagination or it's like a fairy tale or something, but there's
Well, it's
something
been
you
around
feel-
so long.
Yes.
That must be the quality is, you're connecting with history. Rather, if you hold a Bitcoin, what are the
You can't hold a
replica? You go, well, yeah, it's, what is it, 15
Look,
years old?
We
Instead
have
of
5 cents.
thousands of years. Yeah. I feel that way with agricultural commodities, I've been talking about wheat and, it can get biblical. The best commodity trader in history was Joseph, who knew to stockpile wheat because there was 7 years of plenty and then 7 years of naught, which I think we're in. But go ahead, enough of me here. Do you believe that we're in this final washout phase? You want to stay macro here? Because it is important that gold's testing a triple bottom today.
Okay. Well,
But go ahead.
yeah, well, this is the macro. So now gold thrives when these lines, I could have drawn a line breakdown here. So when the SPX breaks down versus producer price index, that's just the start. Then after that, stuff could get dragged down together. US equities could drag down gold, etc. But gold peaks when it hits the bottom rail or it hits at least the median line and dips below. So the final washout move in gold, it's possible that we're very close to it. And I'll show you. So right here, we're below the game over line. So for me, until that line is back above here, you have to now stop looking at growth stocks. It's like pretty much over for them for a long time right here.
Growth, and you should
Growth
be
stocks,
looking.
it's
Yeah,
done.
how about value?
Yes. So value, anything that's hard, that's real, that
Okay.
starts like that pays dividends, that's based on
Yeah.
all that stuff is going to do good, and
Okay.
and they're going to help the SPX and the Dow Jones because those sectors which are undervalued now, under capitalized, the basic materials or the commodity or the energy, they're going to inflate, and they're going to help the overall Dow or SPX not look as awful, right? It's going to help keep it afloat.
Okay.
So if you want to know when gold's going to detach, so once we're below that, we're now looking for gold to detach from the US equities. And I just put a chart here, this one here. This is the NASDAQ. So the candle chart, monthly candle chart is NASDAQ. When the NASDAQ closes below its 3-year moving average, in 2001, it took about 1 to 3 months for gold, it's a black line, to bottom and turn up. 2008, hard move down. Then after that, after the close of the NASDAQ below the 3-year moving average, it took, I think, 1 month or 3 months before gold bottomed right here. And this chart I did a while back, it's actually from June. So I think it bounced back, it went back down. I'd have to revisit this. But I don't know how many months it's going to take, but gold will detach from this and start pricing in the monetary imbalances required to keep nominally afloat the NASDAQ. And often that's seen, as the pivot, as all that. And I'll show you a chart where this one's pretty cool because you guys were talking about the initial claims, right? Or weekly claims.
Mhm.
And this is, let me find my initial claims chart. This is a chart where I've seen.
So everyone, you could follow Patrick at Bad Charts 1, as you can tell. He puts out a lot of amazing technical stuff, historical stuff, thought-provoking.
Here. So initial claims. Initial claims is when there's a cleansing cycle. So when the Fed, when the inflation rate breaks down, when there's a recession here, all these green overlays here are recessions. Here's the inflation rate going up, breaks down, initial claims go up. And these are actually bottoms for gold. So when the initial claims break out, that's when the Fed starts pivoting because we're in a recession. Now they start cutting rates. That's when gold puts these bottoms here. When these things move up, you see in 2001 here, initial claims, they go down. Economy's cool, economy's hot. Inflation starting to creep up. What happens? And the inflation breaks down. And this is what people have a hard time seeing. When inflation breaks down into a recession, that is actually when gold bottoms because it sniffs out the easing that's going to come in to save everything. So the Fed, if people are wondering when the Fed's going to pivot, I don't think they're going to pivot before the initial claims start going up. That's going to be the gold sign, initial claims going up. Every time you see they spike up, we're heading into a recession in the 70s over and over. That's when there's the cuts, and that's when gold bottoms. So did they go up, the initial claims number? I'm just waiting. This chart I did a while back there. I'm just waiting for initial claims to start creeping up. And that, in addition to the actual price action of the gold chart, will tell us a lot about when the turn's going to be.
What they can do, ring a bell, Patrick?
I'm going to be screaming everything on Twitter. So if people following me there, they'll get.
Well, I mean, it almost sounds like it's too obvious. You just have to wait until the Fed pivots.
Yeah, you have to also wait.
And then there's a headline, Fed pivots, and that's it.
Well,
and so you don't have to even accumulate before that happens.
Gold's gonna sniff it out 1 to 3 months ahead of time. So on the gold chart, gold's going to start probably moving strong. Here's a gold to SPX chart. Just let me highlight that. I've been tracking this for a while. Gold's going to show relative strength to the SPX ahead of time. This is the weekly chart with a whole bunch of moving averages. That's a 700-day moving average right up here. As soon as gold breaks out of this line here, this one I probably drew it on the monthly. Let me put the monthly here. Yeah, that one makes more sense. When gold breaks out versus SPX, that's another huge tailwind for gold. And this is probably going to arrive, you're right, before the Fed announces. Because I did a chart a while back. Gold actually bottoms 1 to 3 months also before the Fed starts pivoting. So
I'll be interested to see what the price of gold is after you get confirmation on these indicators, to see if they were on time or how early or late they were. Be interesting, don't you think?
Look, yeah, here's the gold chart. Gold, until it gets above, I'll even remove all these drawings. Right now, gold looks awful. Until gold gets above this line, guys, this is my wake-up line. Maybe I could even draw it tighter. There's nothing to do here. Stay away. There's nothing. Until it wakes up, you don't know if this is going to happen. It's going to keep doing, like, I don't know. We don't here. There was less support because it had a strong bull run. And the faster it goes up on the way down, it goes as fast until it could hit an area. Let's say I put a vertical ray here. All this zone here was a congestion area. Here's where it stopped, right? So this was the beginning of the stop. It had some resistance, some support right here. Right now, people might start looking down all the way here. But here, what's happening is we're approaching a wall, a previous resistance and support.
Yep.
So we could have the stop. I don't know what number did you mention at the beginning of the interview? 1550?
I think I have a wedge line coming in around 80, 1580.
Sure. Look,
but, you could have an overshoot. It's in the neighborhood. It's in the neighborhood.
So it creates this zone here, and this zone would make sense because that's a historical. Once we broke out back here in April of 2020 above this wall. So this was a 2013 top wall. So with support critical support. It failed. That is critical resistance. And once we broke above, that was the market telling us something that now this previous resistance is definitely support. And your numbers and the chart, it's telling us, and the market's starting to crash down before gold starts detaching from the SPX. We're probably going to come and retest this wake up line. And then after that, could have a move here.
So do you believe we need a turn in the dollar to get this turn in gold?
Gold will
Because there
again.
was a period, you were right, and I was looking for a top in the dollar because I was constructive gold, and they both went up together prior to the Russian invasion for about, I don't know, 6 months. They were both going up together. So do you think we need a top in the dollar to?
No. Well,
Nope.
in hindsight, we will need a top, but in foresight, gold again will bottom and turn many months before the DXY breaks down. So there's many examples of this where, let's say in the 2000s, let's look at the beginning. So here I overlaid the DXY. Here's the gold chart. I'll pinpoint exactly. And that's why, guys, you cannot pick bottoms. But look here, this in hindsight in 2001, this was the bottom candle right here. The wick, you can make a case for any of these two. Gold started going up and that was it. But look what the US dollar actually did. Blow off
It
top,
kept going
double
up
top.
for a while. Yeah.
Yes.
Then it came apart.
Well, if people wait for the DXY to break down, just like if they wait for the Fed pivot,
They miss
to do
half the move.
they're too late.
Well, they're not too late. It kept going, but they missed a good piece of the move.
Yeah, and that's fine also, because you want to find the sweet spot, right? You want to let the trend build. You want to have some bullish momentum to confirm the trend is active before, because it's always fun bragging rights. Oh, I called the bottom, but as a trader with risk and money management, I can't really buy here with like guessing it, right? You have to wait for at least a trend line to break out, but gold's going to start breaking out. See here, it broke out, retested, and still the US dollar didn't break down.
Where's major support in silver, Patrick? We have about 9 minutes to go, and the gold silver ratio still looks kind of negative to me. I want to get your silver outlook here.
It's not good. Here,
silver.
I have a potential arc for silver, but until you could forget this there. This is the line. This is my wake up line, guys. If you want to do the easiest TA possible, all I need is 2 lines. I need hold on. If I dumb it down, I have this line called where's my template? Sleep mode line. Here's my sleep mode line.
Do you still believe silver is going to outperform gold?
Definitely, but not before gold breaks out versus SPX. This is it, guys. Look, I'll show you what silver tracks. Where's my gold to SPX chart here? Here's gold to SPX. Here, I'll just overlay silver. And then, guys, that's why I'm telling people on Twitter, no use to look at gold, at silver or the miners. No use, guys. No use until gold breaks out versus SPX. Because look, below this, the candles is gold divided by SPX. And look what silver does, guys. It tracks those capital flows. Look at that. Silver is tracking a ratio. That ratio is defining capital flows. So silver, until gold breaks out here, there's no chance for silver. No chance. Nothing's going to happen there. It could go sideways. It could start prepping, creating a nicer base, a double bottom, a higher low, stuff like that, preparing the setup. But the actual breakout and the sustained move that's going to bring us and enact a 10-year bull run for silver is when gold breaks out versus SPX. Let's see when that early breakout line was, and gold had to move a lot off the bottoms in 2000 for even silver to start moving up. And then after that, once gold breaks out, retest, look what silver did. Outperformance. Gold went sideways versus SPX, and silver just rocketed upwards, pricing in the destruction of purchasing power. So adding zeros to everything to save nominally the indices. And that's always a recipe, right? What they can't do in real growth, they jack it up with fake growth, inflation.
Well, you know how they could do that if they wanted to. They have to break the dollar. Okay, so if they broke the dollar, everything in nominal terms goes up because the dollar's weaker. That's how you get your first 20-30% off the lows in the markets. The dollar came off 20-30%. So it really wasn't, it was all nominal for most of these major lows for the first part of
helps.
the rally, all nominal.
Exactly. Like here,
So,
purchasing power, Dale, it's US dollar strength. So it's the nominal dollar and inflation. So if the dollar loses strength versus other currencies, nominally it helps. And if there's inflation on top of that on your US dollar, because the US dollar could go up and have inflation. We're having it right here, right? It's getting strength versus the yen versus the euro, but there's high inflation. So that's probably helping the gold price not go further down than it was going. It's all about purchasing power. If I could show you just one chart, purchasing power. Here's a purchasing power, remove indicators. Here's a purchasing power. And that chart is exactly, and I'll put the silver chart because silver was not pegged prior to 1971, new price scale.
Yeah.
And look at this, guys. Look at that. It's the inverse. You see the silver going up?
Yeah.
If I do an invert the scale of the silver, it tracks your purchasing power. Yes, there's spikes. Of course, that's why we use the SPX divided by PPI. When there's a breakdown, silver's cheap. You buy it, because people always compare silver. It's not above its 1980 peak. Well, yeah, that's a peak, end game, bull run peak. You can't measure by that. If I would have put a moving average of silver here, look how it tracks your purchasing power very well. I could have put the US oil, anything real, value. If you want to come back to value, anything real, look at the
oil.
I'll do invert scale of the oil chart on log. Look how it tracks oil, also tracks to perfection your purchasing power. So the more your purchasing power goes down, the more oil, silver goes up, and gold would have been the same thing. Look at this. And this is data from the Fed. They're not even hiding the fact that the purchasing power, they're destroying it. It's their own recipe. It's and they're going to keep doing it. It's just
if they want to finish the job, they they turn the dollar. That'll finish the job. So you take the Dixie down to 70. That would finish the job. So Patrick, you want to show your? Oh, okay. Go ahead. What's that?
Yeah, and that's why people have to see the strength in the US dollar as fuel. It's a fuel reservoir. A strong US dollar is always present at the beginning of a bull era in commodities, not at the end. At the end, the dollar will be weak, guys. Think about it this way. The higher the US dollar now, the more fuel and the more powerful the bull era will be in precious metals as it unwinds, like Dale said. That's how I want to see a DXY 113, 120, really. Like you're going to a racetrack for long, like Le Mans.
I'm hearing 116. We'll take that 114 recent high out. We'll trade.
Sure. Why not? It could go wherever it wants, but once it starts breaking down and gold starts breaking out, that's the winning combo. I just want to add this there. This is a 7-year rate of change for your purchasing power, guys. And it broke down from a 40-year base, guys. Never seen before. Here, look at this beautiful top in purchasing power destruction. And it's accelerating here, the purchasing power destruction. So hold on tight, guys. This is something we've never seen before, or the last time.
I have.
It's 1970s.
I remember it. Parts of the 70s, but I remember 1979, Russia invades Afghanistan, gold's trading 880. That was the end of the gold move, and silver was $50, 1980. That was a bull market that didn't restart for 20 years.
And we're right there, guys. We're right there, guys. It's crazy. Okay. It's happening before our eyes. It's unfolding.
Yeah, why don't you show your website?
Sure,
Patrick, so people know how to follow you. If you have any offers for any of the viewers or attendees.
Yeah. Well, this is our website, guys. Look, on Twitter, everything's free. I do the macro stuff. Just go follow me on Twitter and it's fine there. For those who want to track us, me and Kevin Wadsworth, North Star Charts, we have a website. We have currently 50% off for the whole month of November. And but we're there for everybody. So that difference there in Twitter, limiting characters. But for our members, we're always there. Yes. And we put the actionable charts. They're all our trades, everything we do there, they're all available on the website. But guys, if you don't want to worry about it, just go on Twitter, have fun there. And
you're a great guy, Patrick. You have a giving spirit. You give a lot away for free. And you and Kevin prove the math that at times 1 + 1 can equal 11. Not just 2. All right, buddy. So that's my endorsement. I love their work. If you don't know about them, follow them. And Patrick, always rooting for you and Kevin. Have
Thanks.
a great fall trading season, and always look forward to talking to you next time.
All right. Thank you, Dale. Appreciate your time, man. Thanks,
All
guys.
right, Patrick Kareem at Bad Charts 1 on Twitter, and it's Bad Charts 1 North Star is where you could find them. So people are thanking you, Patrick.
Thanks, guys. I'll stop
All
the
right.
share now. Bye.
All right. So everyone, you could, yeah, 82. I remember. Let's see. Let's go to don't just count your pips, count your blessings, everyone, and you can join the team in 15 minutes for the morning edge. Adios.